Oh, okay. Are cameras ready? Good. Thank you, ma'am. Okay, thank you so much for being here. Because as you know, as the state continues to grapple with the devastation caused by Hurricane Ida, we're working to help policyholders affected by the storm and their rights, and you are the vehicle by which we can communicate that information. We're also trying to make sure that insurers are holding up their end of the bargain they entered into with their policyholders when they sold a policy to them. It's only been 10 days since Ida made in Louisiana bearings. Today I'd like to offer some guidance for policyholders and explain some of the actions we have taken to guide insurers in their responsibilities after a storm of this magnitude. Hurricane Ida was a clear and present danger to the citizens of Louisiana. Officials throughout the region took to the airwaves to get the message out that people indeed needed to leave or to stay in a safe place. Insurers must treat the many diverse actions taken by public officials as tantamount to an order to leave and pay people who have coverage for those expenses as if a mandatory evacuation had been issued. Hurricane Ida was of historic power. The top winds were 150 miles per hour, and it's at its initial landfall and brought with it a storm surge of 100 feet. Category 5 winds begin at 157 miles per hour. And we saw just last year, Hurricane Laura hit the southwest corner of our state with such 150 mile an hour winds. And those winds for a hurricane event most powerful since before the Civil War, when the so-called hurricane of 1856 brought winds of that strength to our state as well. So, with all of that said, many people faced the decision of whether to stay or leave. My own experience, I left here on that Friday evening before the hurricane at about 7 o'clock, got home about 9 o'clock, and my wife said we were heading out of town. I tried to discourage her from that because our grandson was running in a cross-country race the next morning out on the lakefront in New Orleans at 6:30 in the morning. I said, we can leave, it'll be over with in a half hour, and we can head out then. She said, no, we need to leave tonight. And so we did at about 11 o'clock and got to, about 10:30 actually, and got to our destination in Alabama at 1:30 the next morning. And my daughter, whose son was in the cross-country, it was not easy to make your way out with the traffic that showed up the next morning. Very reminiscent of 16 years to the date earlier, when the city of New Orleans was being hit on the same date by Hurricane Katrina. And that storm followed by 1 year the hurricane that had a year before and had headed initially toward Louisiana with frightening projections. And the state ordered a mandatory evacuation and used for the first time contraflow, and it did not work. It gridlocked. And from here in Baton Rouge to Lafayette, particularly in the elevated bridge through the Atchafalaya, folks were locked in place for 8 hours, unable to move in weather like we have today, 95 degrees and 90, unable to get to run their air conditioning. And that unpleasant experience, in fact, in some cases life-threatening experience, caused many people to not choose to evacuate a year later when Katrina came our way. many said, we got stuck last year, we're not doing that again, and stayed in their homes. And of course, would have been safe in hindsight if the levees had not failed. But they did fail, and 1,800 folks were left in floodwaters to get into their attics and wait to be rescued and not make it. Those 1,800 lost their lives. I dare say a good number of them lost their lives because of what they had experienced the year before, causing them to not be willing to subject themselves to a mass evacuation again. It worked the second time, and those who wanted to get out, Contraflow accommodated the entire number. We left on a Saturday evening that year and left and drove to Baton Rouge on the wrong side of I-10 without significant traffic impeding our way. It was midnight when we left, and we were able to get out smoothly. But that experience was not necessarily going to happen as, in many people's minds, as they had experienced the failure to be as efficient the year before. So, with all of that said, there's various language applicable to civil authority provisions of homeowners' policies. Some say I am saying in my order, in Directive, I have it right here, 218, that all of those actions, speeches, warnings, evacuation, are to be considered, or to not be considered, and to be waived as a requirement for additional living expenses or reimbursement of the cost of evacuation for what is, in almost all policies, the 14-day limited period of time. We initially asked in the form of a bulletin for companies to honor that request. It had been asked the day before. I issued mine on last Friday during his class, and he called on the insurers to not hang their hat on the requirement of a government-mandated evacuation and to honor the expenses that they had promised to pay for situations like that. That provision requiring an evacuation order is there to protect insurers. The insurers are fearful, and with good reason, that if they just said, if you leave for a hurricane, it'll become an invitation to have a week stay at a vacation destination every time a hurricane heads into the Gulf. So they tried to rein that in, and it has worked over the years, until this instance, when local officials were faced with the choice on short notice, because this hurricane developed into a major threat in just 74 hours of time. They a mandatory evacuation and risked the situation that happened in 2004 with Hurricane Ivan, where folks would be gridlocked in their attempt to escape and have to make it through that hurricane with its 120, 30, 40, 50 mile per hour winds in their vehicles in bumper-to-bumper gridlock traffic on the interstate. Or stay in your safe place in your home or wherever you can seek shelter that would provide greater coverage. And some ordered a mandatory evacuation. I understand terrible, Lafouche assumption did, and some did not. And we feel like the appropriate thing for insurers to do is to not assert this provision in their policies that's there to protect them from, and instead to provide the coverage to their policyholders who were faced with a life and death situation as that hurricane approached our shore. So with that said, I'd be happy to answer any questions. In my bulletin, I asked, as the President had the day before, and thought I was going to get buy-in from the industry at large. In fact, Allstate, to its credit, had sent me an email the day before the President made that urgent request for companies to accommodate these expenses, and asked me to issue a advisory or bulletin urging companies to do so, and they would accommodate. And of course, they have accommodated. USAA, I think, on the President's urging, also began accommodating his request. Others have joined in. A small company, United Property and Casualty out of Florida, that writes homeowners coverage, is honoring it. Pure, which insures a good number of upscale properties in our state, is accommodating that request as well. But to my great surprise and disappointment, State Farm asked for a call with me on Monday. They accommodate that request and would not be honoring it in the form of moving away from the strict language contained in their policy. That is our largest insurer, and when they made that decision and conveyed it to me, I decided that I should take the action that I have taken here yesterday evening by ordering the industry at large to waive that part of their policy. So with that said, I'd be happy to answer any questions any of you might have. We'll start with the folks in attendance. Yes, ma'am. Would you use that mic, our mic?
Can State Farm now override what you're issuing now, and then what parishes does this apply to?
It applies to the 25 parishes in the boot, in the governor's emergency declaration. It goes from the Gulf to the Mississippi line, and from Mississippi on the east to a line straight down, we call it the boot, those 25 parishes. State Farm can't ignore my order. No insurer can. I'm their regulator. But they can challenge it in court or in the division. Such a challenge. If not from State Farm, then maybe from one of the other 136 different companies that write homeowners insurance in our state. But so far, they're the only one that has told me that they were not going to accommodate the request that we had made. And of course, this just went out. I just issued this directive yesterday, so I've not heard from any companies as to whether any others? Yeah.
If an evacuee is out of town for more than
Say that
2
again?
weeks, if an evacuee is out of town for more than 2 weeks, what happens then?
They're cut off at 2 weeks. That's the policy limit of the coverage that they purchased. It's almost uniform in almost all homeowners policies for up to 14 days. I call that short-term additional living expenses. There's also a provision that I refer to as long-term additional living expenses. That coverage comes into effect if your home is left uninhabitable while it's being repaired. Big tree comes through the roof. That additional living expense brings with it typically a 1-year duration, not the 14 months for the evacuation type short-term additional living expense. Farm 2 years for uninhabitable dwellings, but this is 14 days. Yes, ma'am?
How do you feel about State Farm and their reaction to this whole entire situation?
I was not pleased, and they could tell during the conversation. I don't think the word unconscionable is inappropriate. This provision protects them, that they are now turning and using using against the insurers that they sold this coverage to. And as I said before, no other insurer to take that position. And it's not an exorbitant amount of money in the overall premium and coverage that applies to a homeowner's policy in our state.
And whenever you say this order that you put into action, when does this come to an end?
There is no end date, but the coverage generally ends at 14 days, in 4 more days. I did get a call asking for a definitive start date, and I told him we'd look at that, probably starting it on the Friday before the hurricane landfall. I know in my own experience that's when my wife said she's getting out of Dodge. Whether I was coming or not was the only question. And others have told me, as I've relayed that story, that was their experience as well, with friends and family that were frightened threat of that huge hurricane that was coming and did come and devastated many parts of our state.
And when we're short term, I'm a little bit confused. So you mean, when you say short term, this is for 14 days or 14 months?
14 days. It's for evacuees during their need for additional living expense. They have to continue paying their mortgage, for example, and then they have to pay the hotel bill where they're evacuating to get out of harm's way. This has never come up before. It's always been easy to accommodate. In the Laura situation, for example, Calcasieu Parish issued a mandatory evacuation order and lifted it when they were inviting folks Lake Charles area. Parish, where I live, for example, not only did they offer a voluntary evacuation order, make your choice, because it's dangerous either way, so make your choice, but be safe. After the storm came through, the entire parish was virtually without power, and the resulting winds blowing over trees and pulling up with their root system, water system out of commission until yesterday, for a week and a half virtually, made the conditions in Jefferson such that public officials were saying, don't come back yet. It's still not safe for you to be here. There are power lines down everywhere. A house two blocks from my house burned, frankly, beyond use as a result of a transformer on a pole in front of their house falling on their house during the storm. Had a dozen firefighters putting the fire out and protecting the 2 homes on either side during the hurricane winds, live on television that evening. So it was a horrific event, frankly, in many ways worse than Katrina, absent the levees that put 1,800 people in a place that they couldn't survive.
And one more question for me. So this applies to hotel bills, meals, gas, traveling, all that good stuff?
Yes, it does. Food at a reasonable restaurant, not at a spa. You have chat?
Commissioner, we have several questions online. We've got a couple that have to do with reasonable expenses, and I will read one to you. What are reasonable expenses as defined by the directive? Is it just lodging? Is it dinner for the family at McDonald's? Or is it a night out at the Capitol Grill?
It's none of the above. We did not, and the policy does not, the policies do not define what reasonable expenses are. Bring your receipts for your expenses incurred and present them to your insurer, as with any other part of your claim. And that agreed upon reasonableness will dictate how much is paid. And if you're not satisfied, take the check that you're offered and file a complaint or file a supplemental claim thereafter, or do both. Get involved in the disagreement with your insurer. So the answer to the question directly is there is no definition in the directive nor in the policy. Reasonableness is in the eye of the beholder, and it's between you and your company to come to an agreement on that.
We also have a question about whether deductibles will be applied.
Great question. And we've looked at that with the 136 policies, not all 136 policies. We approve the policy forms for admitted carriers, and of those 136, probably all but 24 are admitted. The others operate on a surplus basis. They are also covered by my directive, but we don't have possession of and don't approve those policy forms. But the bulk of the industry that we do have on, doing business on an admitted basis in our state, we've looked at probably 24 policy forms. The bigger part of that is those companies that use a group called ISO, Insurance Services Organization, to process and to get filed and approved the policy forms they use in maybe 36 states, the companies that subscribe to that service. We looked at ISO's policy form, we looked at State Farm, and a couple of other companies' policy forms. And we found 3 different forms of deductibles. Some say the civil authority additional living expense coverage is subject to the hurricane or named storm. Some say it's deductible, which is generally $1,000 or maybe $500 to $2,000, $2,500. And some say there's no deductible applicable to it at all. So there's 3 different versions that we uncovered. It is dependent, your situation, your deductible is dependent on what your policy language provides.
We also have several questions about whether this applies to personal as well as commercial lines, and should we consider business interruption triggered as well under civil authority?
If there is a provision, which most do, for civil authority business interruption coverage, then yes, this applies to those commercial policies as well.
We have another person asking if you could be detailed about delineating between evacuation expenses versus additional living expenses. Could you maybe describe the difference between the two?
Well, there really is no difference. There's 2 different, as I mentioned earlier, 2 different kinds of additional living expense. One is related to civil authority causing you or urging you to seek shelter elsewhere, and in the process incurring additional living expense, such as a hotel, such as meals, such as gas and other vehicle cost. Those things apply to what we're talking about here today, civil authority triggered additional living expense. The other, or what I refer to as long-term additional living expense, comes when your property is damaged into a condition that is uninhabitable. The roof is off, or what have you, and you, while it's being repaired, can't live there. It's not suitable. Those additional living expenses are long-term and can last, in most cases, up to a year while the repair is going on. In State Farm's case, it lasts for up to 2 years while the repair is underway.
What are expenses if the issue goes to court? How long could it take them to be reimbursed, and what if they need the money now?
The going to court is, of course, between me and the insurers that would challenge me. If that doesn't happen, then there will be no delay. If it does happen, and if it drags out and continues in a lengthy process, number one, I'll be surprised, because the courts know that there are folks out there, thousands, if not tens of thousands, who really need this money and are struggling in a very, very difficult situation that many in these 25 parishes find themselves in. There will be the ability to ask for individual assistance under FEMA. FEMA correlates their individual assistance with the insurers that an individual applicant is insured by. And they go back and forth with each other, just sharing information about what insurance coverage there is, whether the coverage has been denied, which some have been. That's how this came to me initially, with consumers complaining about the fact that insurers were hanging their hat on this mandatory evacuation requirement to deny them coverage for their expenses that they legitimately incurred while evacuating this dangerous situation. FEMA and their insurers work together in making a determination as to what they'll pay now. Maybe the insurer will pay now, maybe FEMA will pay now, and what will be deducted as a credit against their claim under their coverage down the road. So that is an option that I would urge everyone to pursue. File and ask for FEMA assistance. It's not based on income. It is in part based on insurance availability, but all of that can be handled in the application process with FEMA and in the claims process with their insurance company.
We have a couple of questions related to the 25 parishes, and one of the questions is, what about individuals outside of the 25 parishes who evacuated because they were also concerned about the store? Would they have the right to claim 14 days of expenses?
Not under my order. They can certainly claim it, but their company will not be under an edict or an order from me to waive that mandatory evacuation language or any evacuation language if there was no evacuation in their parish. If they did evacuate and their parish did issue a mandatory evacuation order, then they're as good as anybody under this directive is as well.
We also have several questions related to insurance rates. One is whether someone's insurance rates could go up if they make a claim, and anticipate that insurance companies will drop coverage for places like Grand Isle going forward. Also, is there anything you can do to force companies to insure the entire state instead of just portions of the state?
Okay, one at a time, and help me remember number 3. I'll start with number 1, which is a really good question. What effect will this have on an individual policyholder's rates? And the answer to that is an absolutely unequivocal Louisiana law, no, it will not. Act of God claims cannot be used under Louisiana law, and this predates Katrina and has been recognized throughout the industry for as long as I've been commissioner, going back to and before. In the 16 years, a statute that bans the use of a claim filed for an act of God loss. Hurricane, hailstorm, tornado, those claims cannot be used to raise your rates, to decrease your coverage, or to cancel your policy on an individual basis. Cancel your policy if your policy, well, it can't be used to cancel your policy at all, can't be used to non-renew your policy if you also have the protection that another Louisiana law provides you, which is what I refer to as our 3-year protection law. Going back to Hurricane Andrew in 1992, that says if you've been with your homeowner's insurer for 3 or more years, you and they are married as long as they do business in the state of Louisiana. If they want to get off of that coverage, they have to exit the entire homeowners market in the state. So, can't be used against you. When they raise their rates, they have to do it on a statewide basis. If they raise their deductible, they have to do it on a statewide basis. subject with different rates for different zones, insurance zones or zip codes or whatever, but not individuals who filed a claim. How can I make companies do business in Grand Isle if they want to do business in Shreveport? The answer there is I can't. This is a private industry that is regulated in all 50 states at the state level. I can't tell a company that they have to write coverage in Grand Isle, for example. But I want to say two things about writing coverage in Grand Isle. One is the state does provide a market of last resort. It's called Louisiana Citizens Property Insurance Corporation. They have to write coverage for anyone who can't get coverage in the private industry, in the private market. Having said that, when I took office, Citizens was our third largest insurer. Only State Farm and Allstate had a larger percentage of our homeowners market back in 2006. Today, they're our 35th, with 0.5%. The private sector has taken their policy count down from 173,000 policies to 35,000 policies today. A huge benefit to the insured public out there, because that system is funded by putting the risk for those policies on the policyholders, commercial as well as Katrina. It was necessary to impose a 15% assessment on every policy in the state, followed by the issuance of $1 billion bond issue that we're still being assessed each year for 5 more years to finally pay off that $1 billion bond issue. That risk went from 173,000 policies, mostly in coastal parts of the state, to 35,000 policies. We went from that situation in 2006 to last year with 5 named storms making landfall in our state, the most ever, and the second most, $10 billion, being paid by private insurers for claims as a result of Laura, Delta, and Zeta, to where our Citizens market of last resort assessed not a penny on any policyholder. They paid claims with their in-place reinsurance and cash on hand, and have advised me, we have a board meeting here in this room tomorrow, that that will be the case again with this instance, which is projected to cost private insurers in our state between $15 and $20 billion. They paid $10 billion last year for Laura, Delta, and Zeta. They paid $23 billion in 2006 for Louisiana-owned losses. Still, the worst insured loss event in the history of insurance anywhere in the world. Bigger than 9/11, bigger than the Japanese earthquake and tsunami, bigger than any wildfire in California. It's still the record holder, unadjusted for inflation, pure 2006 dollars. And we'll be through this event as well without an assessment on the policyholders to fund that market of last resort. Did I miss one of the questions? Got them? Okay. All right.
The next one is, do insurers define how a property is declared uninhabitable? Is the lack of utilities, sewage function in the parish, and the medical need of the individual considered?
There is no definition. Again, similar to expense for additional living expense, uninhabitable is a general term. There is no way to define what is uninhabitable. But it does not include, and has never included, the lack of utilities, loss of power, or the lack of utilities or lack of power. In fact, there was an effort in the legislature to mandate such coverage on every power and utility failure, but that bill did not make it through the session. And I will add that such coverage does not exist, to my knowledge, in any state in America, and I'm pretty certain that that knowledge is correct. And the reason it doesn't is because of the huge expense that would be incurred in paying for hotel stays for everyone who was subject to a power outage in the aftermath of a hurricane event like we have had here for the past 10 days.
We also have a couple of questions about specific companies. One is about how many policyholders are affected by State Farm's decision at this point?
I should have had that number. Lauren, you have it? I don't know. Say again? They have 25% of the market, but I don't know the policy count of that 25%.
We have a question. We have a question that a television station has heard that Progressive had agreed to not Jefferson. Think about that?
I have not heard that. I would be shocked if that were correct.
Okay. I think that's about it.
Good. Thank you very much, and thank you for being with us here today. Thanks.